Hey, welcome everybody to the 40 Finance channel. Taking a look at the news around the stock market today. And once again, it's been a downward trend. I think we're all getting used to this. Let me flip over my screen here. Starting at the top, we have, if I can get these menus out of the way, NASDAQ down 0.79, S&P 500 down 0.5%, Dow Jones down 0.5%, and all that while crude oil is actually down 3.69%. We also had Bitcoin drop under $20,000. So not a good way to run into the end of this week here before the 4th of July weekend. And I guess with the video that we're doing here today, the question is where's all the good news? Right? We know it's not an overly positive time frame in the stock market, but there are some good things happening. And I put together a couple clips here that we'll look at. And there's, the negative news is easy to find. There's no problem finding negative news. But what I was looking for and what I look for typically is just some positives that might help buoy some of these stocks. It's not very easy to find those these days, and they're certainly not as sexy as the negative headlines, but that's exactly what we're going to do. Derek Ridland's here. Good to see you, my friend. Stacking up the cash. Wait to buy until you see gas drop. I agree with that this gas thing is way out of control. It's interesting, though, that crude oil, it's not something I typically follow, certainly not something I typically review here on the channel, but, excuse me, but, the crude oil peak, if we go back to March, we were at 119, then it came down, then we had a peak here of 122, and that was on June 8th, and we're down, not a ton, but I guess that would be, can I say 10%? Just about 10% or so from the peak that we saw in early June. And as you guys, if you've been driving for a while, you will always notice the mysterious appearance of gas prices going up before every major holiday here in the United States. So if you're driving for 4th of July, you're driving Labor Day, Memorial Day, you name it, gas prices seemingly go up before all those weekends. I don't know what the solution is. Considering our leadership in office right now, I don't know that there will be a solution anytime soon. However, I think Derek brings up a good point that we need to see some relief from these crude oil prices before you can get super pumped about the stock market. On the bright side of that is that that could go on. We could have oil problems through July and into August, and then once you get past summer holidays and you think about travel, travel goes down significantly, so you may see the demand go down somewhat. We are in peak freaking demand right now. You've seen the airline cancellations because they don't have enough staff. You have heard about, as many people who are going on vacation, which sounds like a lot of folks will be driving this year because you can't even count on your airplane to get there. Once some of that moves past, hopefully the demand side will bring prices down even further. We'll have to see. Work from home is a lifesaver right now. I agree with that. All right, so I promised some good news, and I don't do a ton on Twitter, just so you guys know. As you see, it's not a huge account, but I read Twitter a lot, okay? And I try to just mark some things, and then I go back and look at them later. I don't heart things because I think they're awesome. I just do it as like a bookmark, and then I kind of review them each week. So here's a couple good things that I highlighted this week. Jim Cramer had Jensen Huang on this week, and he says, if you're on my call with Jensen about NVIDIA's digital twin AI game changer, you would be buying, not selling. NVIDIA, of course, is, let's see if it's still getting crushed today. La-di-da, 1.86 today, but if you look at it on even a 6 month, how about a 1 month? 1 month high, 195, you're down into the 152s. So folks that, NVIDIA was bulletproof, right? When it comes to talking about stocks that people would die on the sword for about their price, and it's getting shook up a little bit. I myself agree with the fact that NVIDIA over the long term is likely a good investment, and I'm very happy when it goes down like this because it affects the QQQ, which I talk about all the time, and that subsequently brings that one down, and you basically have an opportunity, if you're an NVIDIA fan, AMD fan, because they are in the same sort of race here. It's down under 80. You have an opportunity, if you like these companies, if you understand these companies, to build up a nice amount of shares. And so I kind of agree with Jim that if anything else, the future for these companies is bright, and you would probably be more likely to buy than sell if you're making a rational decision. All right, next one here. Let's see if I can bring these up bigger. Lizanne Saunders. The rate for shipping a 40-foot container from Shanghai to LA has now fallen by 38%. We know what's going on in transportation. I think this is too big for you guys to see. But this is good news, right? Supply chain is a problem. We know that. We know that it's not going to get better overnight. But if I was eyeballing this chart, I'm going to say that this is late 2021, right here at the peak, and we are well off the peak on the shipping container rates. I'm not an expert in this field, but I can certainly look at a chart and see things going down. This person, Compounding Quality, top 10 buys of super investors over the last 2 quarters. All the names you know. And this, wherever Datorama comes from. Top 10 buys of the last quarter. I don't know what a super investor is, but let's just assume that it's someone who has to file, what do they call those? Oh, I forget. But they have to do like a K1 filing, I believe, and then that's public information, so that's probably where this came from. Don't quote me on the K1 part. I think I got that name wrong. But you have top 10 buys last quarter, Meta, basically FANG, plus Visa, Moody's, Netflix, PayPal, Adobe, Citigroup. Top 10 buys last quarter by percentage, okay? BRC, I'm not familiar with that one. You see the others. Top 10 buys the last 2 quarters. Essentially the same names. You'd throw in Alibaba, Fiserv, GM, and Comcast, and then by percentage, Amazon at the top. So, take this with a grain of salt. I don't know a ton about the data source, and I'm going to assume that it's people who have such an impact on their buying and selling that they have to file these purchases with the IRS directly, and that subsequently becomes public information. Kevin Hawthorne, good to see you. Derek says his buy of the day might be Walgreens, WBA. Let's take a look. I assume they're down a little bit. Let's see what it says. Walgreens drops on earnings. I don't have a problem with Walgreens. I mean, I can't imagine that world goes away. Walgreens lost ground in the wake of its latest quarterly report, despite, and this is probably Derek's point, despite headline numbers that beat expectations. Earnings and revenues exceeded projections, but the firm's revenue from continuing operations dropped 4% as the company saw COVID-related demand subside. It administered vaccines, blah, blah, blah. Weighed down by the results, WBA retreated. So I'm not too worried about that either. I don't own Walgreens, but I'll tell you this. In Cincinnati, Ohio, like CVS is absurd with their prices. Okay, so if you go into CVS, what I'm getting at is you buy deodorant at CVS, whatever it is you get, soap, toothpaste, whatever, their prices are marked up beyond belief, like absolutely beyond belief. I keep like a hand sanitizer, like squirt thing in my car, probably like most of you, and it ran out, and I was in CVS, and I was like, oh, I'll just get another one. It was like $5. And lucky for me, right across the way is Kroger, and I was going there anyway, and it was back to what you'd expect, $2.50 or something. And I see that a lot at CVS. So I would not be surprised if people have the same reaction as I do, that they just start driving to Walgreens on the flip side, because it's just absurd how much CVS has marked stuff up. And I don't know, it'd be interesting to see how their competition, how those two are doing one-on-one, because you can only burn a customer so many times before they stop coming in. All right, what else did I highlight here this week? This guy's buying AMD at 77. Oh, this is interesting. Same guy. I don't know him, by the way, so these could all be lies. But between 1990 and 2019, S&P returned 7.7% per year to shareholders. If each year you would have missed the 20 best trading days, your CAGR would have been equal to 7.7%, would not have been equal to 7.7%, but instead minus 27%. Time in the market, better than timing the market. Don't try to outsmart it. So very interesting. I didn't run this calculation myself. We'll just assume that it's accurate. And this gets back into this game of, for example, we were talking about NVIDIA and AMD a second ago. Unless you need the money to purchase something else or save the bottom line on some aspect of your life, you got to hang in there. Because I just don't see how AMD, NVIDIA, there's probably 100, 200 companies that are right there with them, where now's not the time to jump out of the airplane. And particularly right now, so if we look at, Walgreens might be a bad example, but let's look at Adobe. I know that one's struggling. And let's look at it over, I guess 1 year will work. So let's just pretend you bought Adobe here at 661, just for kicks. You're at 366 today. And if today's the day after this, another percent down, if this 366 level is where you're finally giving up, knowing what we know about sentiment and momentum in the market right now, I think you're making a huge mistake. And whether it's Adobe or some other large cap company that's making earnings, you might as well wait till December and do the tax loss. And if you're just looking for tax loss, you might as well just wait till December and see what happens. There's no hurry to get rid of it. You have until December 31, right? So it is tricky to see how many people are selling and how the market continues to go down in this environment. And to me, it suggests that perhaps, pure speculation on my part, that people are sort of cashing out, going on vacation because this is such a dismal market, and then that money returns in fall would be my best guess. And I've said on the channel many times, I think post Labor Day, something will improve out of our big headlines that are keeping us down, which is obviously Ukraine, gas prices, supply chain, interest rates, and inflation fears. One of those five-ish things gets demonstrably better after Labor Day, if not multiple versions of them. So, if you do it Derek Ridland's way, you wait till you see the gas prices come down or oil prices come down, and then you buy. But something is off whack in the sell department, and it doesn't mean that Adobe goes back to 660 anytime over the next 12 months. That's not what I'm saying. But I'm saying, it feels like you're selling at the bottom at 366 or daggone close to it. What were we at on 510? So a month-ish ago, more than a month-ish ago, you're at 376, and you survived that, went up a notch, and then came back down. I don't know, man. I just don't know how much farther it has to go forward PE of 27. This is a company that has almost $14 worth of EPS per share. It's not one that I own, except in the QQQ, but I think it's a good example for what I was trying to say there. All right. Derek says he likes Citigroup as well. And PT's here. Good to see you. Buy the dip on FANG stocks with, of course, Microsoft. Such cows, and their stocks have dropped minus 27% since the highs that I expect they would buy back their shares. I think that buybacks are going to be coming down the line big time for the companies you mentioned. I mean, we know Apple already does it. Google already does it. I'm not as familiar with Microsoft's strategy there. Facebook had been doing it. They paused. I don't know when they're going to pick back up. But there's going to be, once those companies all settle out a little bit, the pressure from investors for returns is going to come in hot and heavy, and buying back is one way to do that. And it's one way that, honestly, Apple has sustained its performance. Apple really used to I used to bang my head, trying to figure out how their performance did so well despite basically single-digit growth, let's say up until COVID time. And the truth is, an underlying element is it was the buybacks really helped a lot. And Apple was one of my good news stories today. Let me switch over here because I promised some good news. I feel like Apple is in the news a ton here recently. All right, so maybe it's just me. But just announced today, South Korean developers can use third-party systems, but Apple will still take a cut. That's not really good news. This one was interesting. Apple to push drivers to use CarPlay to buy gas. And if Derek's still here, I was thinking about our Kroger gas, if you still go to Kroger. So somehow, some way, when you park your car and you're plugged into CarPlay, it's going to ask you at some point to pay for your gas. Just, instead of fiddling with the card, you just want to use Apple Pay and it'll connect to the pump and you'll still pump it and all that. I think that's very interesting, and it obviously leads toward an even bigger future where you could conceivably order your Starbucks coffee somehow, some way, and you just drive through and pick it up, and all the crap behind the scenes happens on your car. You totally see that. I don't think that's out of the question. Then you get into parking and such, maybe certain city parking meters. But what is really interesting at the gas pump, and I think all of us do this to some degree, here we have Kroger stores, and you use your Kroger Plus card or whatever it is, and you scan that, and that's how you get your fuel points, which in Cincinnati, they give you up to $1, depending on what you spend in the grocery store and how often you fill up. I have 3 kids, so I rack up a pretty decent, per gallon discount each time by the time everyone's done eating. And I don't know if this Apple solution, even if it was available tomorrow, would do much for me, because I still need to scan my Kroger Plus card. And then, Kroger's far from the only ones that do it. They have this what's the word I'm looking for? Speedway. They got their own card. Everybody's got their own card. On the UDF here, we have United Dairy Farmers. They've got their own cards. I don't know how that's going to work. But from an Apple standpoint of technological innovation, I thought that this was very interesting, and I think I think that it gives you more reason to be mildly bullish about Apple. Things like this can add to your bull case over the long term, just for sheer convenience in connecting stuff to cars. Here's another good news thing for Apple. Chinese demand for Apple's iPhone 14 is stronger than 13, so that's good, right? And they're getting ready to launch the next version, widely expected to be called 14. China is likely to be stronger for the new device than 13. Let's see who thought that. I'm not going to try to say who that is. Ming Chi Ku on Thursday. likely to be stronger. They have had the highest prepaid deposit ever in order to get sufficient supply. So that's probably where he gets that from. So good news there on the 14. And then if you are a Qualcomm, let's see this real quick, if I can find this Qualcomm quote right here. So if you're a Qualcomm stockholder, this is a very good indicator. Apple may keep using Qualcomm modem chip after potentially failing with its own. And look who it is. It's this fella again. His latest survey indicates that Apple was not successful with its development to replace Qualcomm, and instead of using its own chips for modems, it will use Qualcomm for 100% of its supplies compared to Qualcomm's own previous estimates of 20%. So really good news if you're into Qualcomm. And for Apple, it's not necessarily a lost revenue line or a cost saver, mostly because it hadn't been launched yet. Yeah, I would say it was more of an experiment that never got off the ground, so maybe both sides win. What else did I have on this page? Large cap. Oh, this is interesting. Large cap growth fund managers are underweight tech by the most on record. Some of these stats get really weird because we invest more and things cost more now than they used to, say, in 1980. Managers are underweight infotech at -9%. They are also overweight materials by the most ever. They brought down overweight in communications services to 3.9, sorry about that, from 5.3. Consumer discretionary overweight moved up to 0.84 from 0.4. So a lot of little bits in there. I mean, this isn't the most informative headline because it could mean a lot of things. But if you are in tech, like me, then this can be viewed as a good thing in the sense that there's there's a big swath of money that could come back in at any time. We don't know if that's tomorrow or 2 years from now, but as soon as things like oil stocks, as well as materials and some of the other stuff, recession-esque plays, those are already hitting sort of peak valuations over the past year or so, right? And they will continue to pay off till this environment changes. And when it does change, though, those things will come down. Those types of stocks will come down, perhaps fast. It's hard to tell. And then that money is going to roll right back into tech because we're starting to get to the point where tech is actually the value trade of all things, which is hard to say. Derek's been hustling hard, walking dogs for money, selling on Facebook Marketplace. It's just adding up, and it's going to make it so much sweeter. That's the way to do it. And I need to get on that train a little bit as well and start pushing the envelope a little bit too. This is a really good time while the market is in this, whatever you want to call it, what's the word I'm looking for when you're swimming? Treading water. The market is treading water. I don't know why that slipped out of my tongue, but it's a great time to do things like Derek is doing where you're just like saving money, putting money away. Very hard time for me personally from the standpoint of summer because when you have kids, there's summer expectations, vacations, whatever. I'm not as lucky, but we all have one thing we can all do, and that is go bring in more money anyway, anyhow. Sell stupid things in your house that you're not using anymore. Put that money in a separate account and save up for when you think stocks reach a fair valuation. And that's pretty sound advice, I think, for everybody in this particular moment. Sniff's here. Sniff says, are you aware of Moo giving away 11 free stocks if you deposit $2K? I did not know that. I have seen The little bit that I've watched, don't watch as much YouTube as I used to here in the early part of the summer because I was doing a lot with youth baseball, but I'll be picking it back up. And I know there's a guy I kind of like, Beat the Bush, and he was talking about it. And he's more of like a like a fire type guy, just penny pincher or whatever. But he's got some cool stuff. He does some stuff that I find entertaining. So I did see something on there, but I'll have to take a look at the 2K offer. Lion is in the gym pumping iron. Nice, getting stronger for all of us. That's another thing that I'm way behind on while teaching the youth of America how to play baseball. But, we'll see if we get back there. All right, anything else on... Here's one about inflation, I think. Look at oil, lumber, housing, wheat, trucking, etc. Inflation has peaked. All these things are coming down. CPI and Fed policy both lag the real world by 6 to 12 months. Now, that can be, this is one person's opinion, but I will say that the lag is real. And if you do think about the fact that we haven't seen a lot of good news with CPI and stuff like that, don't forget that every time it comes out, we're looking at the end of June at numbers from the end of May, for example. So when this show starts to tilt, it's I don't want to say that it's going to happen fast because I don't want to be confused with saying it's a V-shaped recovery. That's not it. But the good news will build like a small snowball, and that's how we get out of this. But of course, we need several things to happen. Anything else? This one's funny. This one I just liked. Worst bear market of my life. The worst bear market of your life so far. All right. I think that is all the good headlines I had for you today. Let's see what else is going on in the market. We have, I don't recognize some of these. Fintech majors, Shift and Block face significant target cuts at Truist and higher equity risk premiums. FTX abandons deal to buy Celsius. We'll have to see what happens with Celsius after that. I don't have any exposure there, but I know FTX is one of the more financially sound companies, and if they're bailing, that's a problem. Shell suspends, nothing really there. I caught this in a different place, but Etsy and Revolve among new buy initiations in bullish e-commerce review. So I've seen this in a couple other places where folks are starting to become open again to the e-com companies, which have really sold off quite a bit. And I don't know if there's any truth to it. That I should say, maybe not truth, but any reason to explore. But I will say this about e-com. In the way that it's been sold off. You guys know I used to own Etsy. Luckily, that was one of the very few stocks I got to sell at all-time highs. But with e-com, you're looking at the end of the third quarter, fourth quarter is the biggest time of the year, right? And it's hard to imagine that here in the 4th of July, but that world is not too far away. So what will happen is they will report their third quarter roughly, I guess it would be in October, let's see, 3, 6, 9. They will report that late September, early October, and then they'll provide projections on where things go for the fourth quarter holiday shopping season. So if you play your cards right and you follow the right platform and you make sure that things are stabilizing, you could get a stock like Etsy, today, for example, and ride it up through the holiday shopping season and then, just be ready to sell if you want to do that January, February, because then, they'll be heading into the slow season again. All right. Derek says I got rid of all my finance channels except this one and everything money. That's funny. Well, I appreciate that, Derek. I think there's a lot of that going on, where people are just like, so many people got just destroyed by folks that, my portfolio went down, but I've never lied about that. But so many people who were talking about small stocks that were nothing burgers and they went to the moon. And then you kind of find out, who was riding momentum when they were talking about fundamentals. So hopefully, while you probably did not make $1 million off me, hopefully you know that I remain consistent and transparent. That's big. That's the most important thing. Lion says Costco and LMT were the best buys. Look at those two beasts. Never bet against the boomers. I'll tell you, Costco keeps hanging in there. And every time I think it's going to go down, right? Because historically, the valuation is pretty high for what it is. So Ford PE of 36 for a retail store where the margins are probably 3, 4, 5%. But they keep doing it. They keep doing it. Obviously, it's off of all-time highs. Some of that is just the market, right? Anything but oil stocks are down. So that's not super surprising, but they continue to come back and post great numbers. And if you bought this, say, over a year ago, or let's just see, if you bought this on 7/7/21 for $400 or so, you're up $78. And if you were in that camp, granted, you've watched it go up and come down, it doesn't feel like there's any reason to get rid of it, because they just keep blowing the doors down. And this is supposed to be, Costco really, that's a long-term investment. That's just what that stock is. It's not a $3 stock that goes to $6. So congrats to Lion if he hung in there. LMT, which is going to be interesting if Ukraine ever resolves itself, but certainly in the short term, it's hard to imagine that they're going to go down anytime soon. And I will say this, though, like beyond the Ukraine situation, the whole Russia world and how aggressively they went after things, not to mention you still got that China-Taiwan thing going on. It bodes well for defense stocks over the long term when you have these dust-ups, because people start looking at their defense mechanisms. They're like, geez, last time we upgraded that was 1990, and technology, of course, continues to accelerate, which makes new markets for arms distributors. You laughed at me when I bought Costco last year. Laughed. I bought it at $3.30 during the March dip in 2021. Only green in my tax-free account, which I bought on my retirement account. I pay 15% to the IRS. Okay. I don't know if you meant me or Derek, but Costco, it goes back to what I said. Like, I'm not even switching my story. Is like, historically, this is high. It has significantly outperformed, and I'm on your side, man. I am so happy for anybody who gets a little bit of luck in this world nowadays. I wanted to see the historical, so I'll show you what I was talking about. I have to go to Yahoo. Oh, look at this sad face, 1.72%. So my live stream has pushed it down almost a full percent. Costco. Did I spell that right? Nope. All right, so if I laughed, which I'm not debating, this is why. This is annual chart. This is historical valuation levels, right? For Costco. Obviously, you have the sort of pandemic time and where it sits today. But if you go back pre-2018, everything's mid-20s to 30s, which, for a retailer, that's about right. And then you hit a huge run in 2020 and 2021 where you're in the 40s, which is, essentially unheard of. PEG ratio in the 3s and 4s. So it has certainly outperformed my expectations at the current valuation. And but I'm not mad at anybody who proves me wrong ever. I mean, this price to sales for a retail store, you certainly don't want to get much higher than 1, and they hit it last year. But good for you, Lion. It's because of the subscription-based business model Costco runs. They have 95% retention rate. They started this model very early before Netflix, and they're only expanding into China and Asia. And if that is true, obviously, if they can capture even a hair of that market and start to build it out, it looks very promising for the future. Whoops. All right, did I miss anyone? Thoughts on AVAV? AVAV? I don't think so. 8123. Unfortunately, I don't even know what this one does. Here's what came out most recently on the news. Oh, drones. Missing estimates, issuing below consensus guidance. Company foresees EPS of $1.65, below the $1.75, and roughly in line on revenue. Now let's see what we're looking at for the year. So last year at 100, this year you're at 76, tanked a little bit. On the estimates. I don't know enough about the drone market to comment. I can tell you, I can show you what other people think. Maybe. Ratings. Wall Street. Now this is 90 days, so I don't know how much that has changed. They're calling it a buy, 3.71. That has not changed. It doesn't look like here. Recently, you have a high of 100, average of 87, low of 66. People who write on Seeking Alpha, 4.0, they look like they're holding in there. So, depending, I would just say it looks like the market sentiment from analysts and so-called analysts is positive. Just make sure that there is a way to bounce back from this, because this is always the catch, and we're seeing it now, and we're getting ready to see even more of it in late July when the next earnings come out. Is you sort of have the small miss quarter, right? And everybody's like, just small miss, whatever. And then sometimes they come back in the next quarter and they're like, actually, the whole thing's screwed. And then it goes down from there. Now, very difficult to tell which side a company is going to land on, right? Very difficult to tell, and that's why you have to dig in and think about what's going on in those markets. Shopify, that is still riding high. I saw a really funny Shopify tweet. I wish I could have, I wish I would have liked that one. See if it's on here. No, I'm not going to bore you looking for it. Short version is, and you've seen these jokes before, like when the stock splits and they're like, Shopify's down 90% or whatever. Well, somebody did that, just like a sort of parody tweet, and they're like, Shopify's down whatever, 95%, as people realize it's just a place to sell hats. And all these people piled on the guy. Like, you idiot, it's a stock split, where obviously he knew that, right? It was a joke. But it was ding-dong hilarious because these morons thought that he didn't know, like he sold it so well. The problem, though, is, of course, this, and let's just go to valuation. I mean, take a pick of the metric, right? Because it's like forward in the 300s, which is higher than the trailing. That's, eyeball, not a good sign. Pay ratio 7.5 times. price to sales, even the forward 7x, price to cash flow 132 times, forward is 3,000 times. I don't mind the stock and the concept, but it does seem like there's a decent chunk of risk that it continues to go down farther. So my 2 cents anyway. On the bright side, as I look at this, very little debt compared to cash holdings. So who knows? I mean, this is probably a stock that, to get out of this rut in the current environment, needs a big announcement, and stock split isn't, that's not enough. It needs to, add another feature, buy a company, something that's just going to get it excited. We'll see what happens. I mean, they certainly have enough positives in their business model to keep people interested. They just need to keep adding to the shiny objects. All right, guys. That is it for me today. I hope you guys have a good holiday weekend. Get out there in the heat and humidity and enjoy. Get your mind off these stocks and start, do something in the real life, because that's probably the best way to find your way through this, or do the save up strategy, get another job, anything to pass the time while this ridiculousness keeps on. We'll see what happens after the 4th of July, though. We'll see if we've got more pain, or if people had that as a cutoff date to start coming back into the market. It sure doesn't feel that way, that July 5th or 6th is going to be a magical day. If I had to guess, I would say late July, early August is when the buying might start going back up, and that's going to be in the midst of earnings season. So you do likely have some time to add shares of good companies if you can find the means to do it. But hope everybody's having a great day, and we'll see you on the next one.